Good morning, traders. Welcome back for another live streaming session. Gosh, about 3 more minutes until the London opens. So we're just patiently waiting for those extra 3 minutes, and then we should see a little bit of volatility. Quite interestingly, some latest news. SpaceX earnings report came out yesterday, and it came out better than expected. So we have seen quite an aggressive move on the SpaceX stock into the upside, which so I'm assuming quite a lot of you guys, a lot of you traders are probably following SpaceX these days. So I just thought I'll share that news. One thing to be careful of with SpaceX is that I think it's tomorrow or on Friday. I think they're unlocking about 911 million more shares onto the market, and so that could put pressure onto SpaceX and push it down. So I would be a little bit concerned about that. What's also great is with SpaceX going up, we're seeing the NASDAQ 100 pushing up as well, which is really good for any of you set and forget type of investors. So if you have any, if you're holding any positions within the NDQ 100, then fantastic. Anyway, today on the DXY, so let me also explain. I did explain on the daily market breakdowns what has happened with the DXY quite recently, especially with these huge pushes into the downside. And we are quite clearly changing that direction at this point in time. I'm actually hoping that it fails here, and I'm hoping we start to see that climb back up toward the 200 EMA. So one of the big reasons why this has happened is Bank of Japan intervention, and the Fed also intervened as well, which is a bit odd. That actually not odd. I mean, when you put the Trump administration into take that into consideration, he wants a weaker dollar, right? So he wants a weaker dollar. So I'm not, and I guess selling off the US dollar to help the bank or to help an ally, Japan, isn't so far-fetched, but that's what we saw. We actually saw two major central banks push the price down. That's what the sell-off is at this point in time. Okay, so for any of you guys who are trading at the moment or had traded over the last couple of days, you may have been stopped out quite aggressively, and that is the reason why. What I'm hoping to see is a bit of a recovery from the DXY because you have this huge aggressive move into the downside. Yeah, okay, we have now just moved into, I think this is a daily demand zone that we put out here. So I am a little bit precarious that there could be a potential reversal happening from this zone where people start buying back the US dollar. I think if we go and take a look at the 2-year yields, it seems a little bit unlikely because yields are actually on their way down. If the yield prices start to push back up, then we should see the DXY pushing up once more into the upside. So right now we could see a continuation of pressure on the DXY, and it may continue to fall. Okay. Anyway, let's take a look at some of our major pairs today. GBP USD, I was expecting a technical analysis to jump in here. I had originally taken this position on Monday, and we almost TP'd, so very frustrating that it's now reversing. I did think it was going to go a little bit deeper and have a much deeper pullback. We might get stopped out. What I'm hoping for at this point in time is that we have just created this kind of barrier of resistance, and what I expect to happen is this to be rejected once more. If it gets rejected once more, then we're likely going to see that really nice push into downside, TPing, and we may see the price ending up within this potential 4-hourly demand zone here. So that's where the target is. If I do fail, if I am stopped out, then we're likely going to see a continuation. Then we're likely going to see a continuation into the upside toward this previous high here. Okay, before we see another reaction, and that reaction will probably bring us down to the 0.5 fib. and then maybe continue into the upside. Okay, so that's what I'm looking at the moment. I am hoping it does get rejected, and if it does get rejected, we form a beautiful head and shoulders, and head and shoulders is a very bearish stock chart pattern. Okay, so that's what I'm in at the moment. It is not looking good for me, I admit, but that's how I'm looking at it for this time being. So I'm okay with being stopped out on this 1 to 2.5 risk to reward ratio. As I said, I am on good. I am on pretty good analysis that we are on the DXY entered into a demand zone. On the GBP USD, we have seen liquidity being taken and breaks of structure forming into the downside. So I'm hoping it does get rejected. Similarly with the euro dollar, same thing. Yep, looking for that initial rejection. It's not looking that great at the moment. We are seeing that slow climb back up toward this region, this area. And we do know that a really nice slow climb can usually reject quite aggressively back into the downside. Okay. If this fails, then we're likely going to see that continuation moving up into this unverified daily supply supply zone, and that's listed out just here. Okay, so that's where we could see that next pullback, and we'll likely want to trade that pullback, right? So if we go up into this unverified daily demand, we might see a bit of a reaction for, let's imagine that's where the new high would go. We might see a retracement back to the 0.5 fib on the daily frame once we re-enter into that supply zone. Okay, so that's how I'm playing it at the moment. As I said, what I am hoping for, because I don't think we've really seen. I mean, look at this pullback on the daily. It is non-existent. There is really, honestly, a very little amount of pullback, and so I'm expecting there to be a deep pullback now. And as we know, there through alternation. I think that's the right word. Through alternation, if this is a 0.7 or 0.3, so it's a very shallow pullback. If I do fail, if I am stopped out, which again is perfectly fine, and we do re-approach this unverified daily supply zone, because of alternation, we are going to expect a very deep pullback. Okay, and I prefer, I don't know, just my trading style. I like to trade pullbacks. I feel like they're more predictable than trends. But so if this fails, that's what I'm going to be waiting for. That's what I'm going to be waiting to see. I'm going to be waiting for the price to re-enter into that unverified area of supply, and then I will start looking for those shorting opportunities on lower time frames. I'll take a look at breaks of structure and changes of character into the downside. Okay, so that's my play at the moment. I'm going to hold on to this trade. It's fine if I get stopped out. I'm holding on to this one as well with GBP USD. Again, hoping it gets rejected and it forms this beautiful head and shoulders, and we eventually do TP. And by the way, if we do TP because of that alternation concept, and it begins to push up again, we're likely going to see a shallow pullback later. Okay, so that's just kind of how I'm analyzing the charts at the moment. If you were to enter, if you were to be entering on these lower time frames, let me just clean this up a little bit. Yeah, by the way, I mean, what that was just because I was just analyzing that there was a nice breaker structure here. It came up, it came back down, and then this was telling me, actually, I should have entered into... actually, no, I did. I think I entered actually up here, but this was a really clear indication to enter into a position. Maybe I should have put my TP there. Oh, that would have been nice. That would have been really, really nice. And now, frustratingly, it's climbing itself back up. Hopefully this rejects. Even if it does come back, hopefully this part will reject as well. But if I was to, if I were to enter, let's say, a long position, let's say on the 5 or the 15-minute frame, I mean, would have to kind of look down toward maybe here, because if it pulls back down, and then that might actually continue into the upside. We'll see. We'll see. Because I've analyzed this more as a shorting position rather than a long position. And if I look at it from a long position, I'm just trying to make my analysis match my my ideology or my trading strategy, which is never a good thing to do. So I'm keeping this for now. USD JPY, obviously not trading this. Obviously not trading this this pair for the absolute reason that it's just one huge bundle of volatility and manipulation. And so this is the reason why I'm not trading the USD JPY at the moment, especially with like I mean, sure, you have these interventions and you're going to sell off a substantial amount of US dollar bonds to push or to revalue the Japanese yen. Perfectly fine and very understandable. But keep in mind, guys, Japan has a debt to GDP ratio of like 300%. Okay, so even if I sell, I don't know how much they sold, it would have been quite several billions of dollars worth of US Treasury bonds would have been dumped onto the market to have created this. What do you do after selling or dumping those bonds, right? You have a 300% debt to GDP ratio within your country. And if you're not putting that money toward stimulating the economy, then the yen is just going to devalue again. So it's going to push back into the upside, okay? And I've not seen anything. In fact, I should do a little bit more research into what they're actually planning on doing to stimulate the economy. But 300% debt to GDP is remarkable. And so never hold your breath on the Japanese, the Bank of Japan, increasing interest rates. That's not going to happen. Because as you guys know, if Japan increase the interest rates, then that also increases the interest amount that they need to pay on that debt, which is just going to break the economy. So that they're not going to raise interest rates anytime soon. And I think what we're going to see is just this slow crawl back into the upside. So if you guys are looking for those long positions, I completely understand. I completely understand if you're going to go long on USD JPY. I completely understand because historically, if we look back here, I mean, again, historically they did the same thing here. This huge intervention, manipulation, with these two cycles, and then just that slow burn all the way back into the upside. Okay, so if you just took a look, if you look at it from that perspective, see at how many bars is that? What, 7.8? Substantial recovery. They did the same thing here, recovered. Same thing here, recovered. So now they've done the exact same thing again. I assume they're going to recover. Okay, so if you're looking for those long opportunities, then I'm not going to blame you. I certainly would also be looking at that. But again, is the intervention over? That's what I'm afraid of, and that's why I'm not trading the USD JPY. Okay. Technical analysis. If we apply technical analysis to this, it would tell us to short. That's so, and I'm saying that historically the price rebounds. So, that's why I'm not touching this pair. USD Swiss franc. I'm not analyzing at the moment. Let's take a look over at. We can look at gold, but I have some. Oh, beautiful. Oh, okay. That's unexpected. I didn't take a look at that earlier today. Oh, wonderful. Okay, so it's finally started to push into a direction. So the reason why I wasn't trading gold was because we're in consolidating markets and there was no clear trend direction. What I was also quite concerned about with gold was that because the DXY is pushing down, yeah, right now I think because the DXY is now pushing down quite aggressively, but gold has been in such a horrible downtrend for the last couple of weeks. I've just been afraid to go long on these positions. So in fact, I'll just be looking for those shorting opportunities on gold. Yeah, fine, we're seeing this right now, but I'm assuming it's going to get this has been a very key area of resistance. So sure, on those lower time frames, if you guys are going long, and I know a lot of you guys are, especially in the prop trading space, you can profit quite aggressively just off a few points on the lower time frames. But on the higher time frames, I'm seeing that as a very big area of resistance, and we're in such a horrible consolidating market with gold at the moment, and all the analysts are saying that gold is not going to retain this price. I think they're expecting gold to go down to the 3,900 mark. I think it's 39 to 37. Okay, so we should be looking for those shorting opportunities. Okay, so let's quickly go in. Let's dive. Let's actually do some let's put some stuff onto the actual charts. Okay, so we've got a really nice part of liquidity that was taken here. Gosh, I can't even bloody find my tools. Here we go. So we got some nice liquidity that was taken up here. It pushed itself down quite aggressively. It came back up, but it failed, and then we broke market structure here. Okay. Based on that, we then I'm on the daily on. I should be doing this on the 4-hourly. Okay, so what I would then expect is this beautiful candle to begin forming. So we can say that this is liquidity now being taken. As we know, London session is a very manipulative session, and we could begin seeing the formation of that inverted hammer candle pushing or rejecting the price. I would just keep monitoring this. Remember, we're looking for those shorting opportunities on gold at the moment. I would just keep monitoring this for the time being. My goodness, look at all of this volume going in. Okay, so here we go. This is where we can take a look at this range. Okay. Yeah, all right. This would be where I'll be looking at for the time being. Okay, so I'll be monitoring. I mean, a lot of you guys might be tempted or to enter into long positions. I wouldn't personally, because we're at a very key area of resistance on the higher time frames. We are looking for those shorting opportunities. There is really no basis or indication for us to say yes, or at least within my strategy, there is no confirmation for me to say, yes, I'm going to enter into a position. So what I want to see is price pushing down, and I want to see a candle close below this point. What I then want to see is if price continues to come down, I want to see it come back up. I then want to see a bit of a zone being formed. And then if it rejects again, breaking this structure, then I know to enter into a short position. Okay. So that's how I'm analyzing gold at the moment. Just purely based on the higher time frames, we're in a key area of resistance, and it's quite clear that we are in an area where liquidity could be taken. Oh, somebody's trying to join the live session. Give me a second. For any of you guys who weren't here at the beginning, I just did a little bit of a breakdown on SpaceX's fundamentals. The earnings reports came out much stronger than expected, so we've just seen a huge push in SpaceX going into the upside. Although I would be kind of cautious to put any money on SpaceX, because tomorrow they're going to be releasing about 911. You can see this, just look at that sheer buying volume. Absolutely fantastic. They will be releasing about 911 million shares onto the market tomorrow, so we might see that pushing down. Any of you traders who are trading NDQ, again, be kind of cautious because of SpaceX. SpaceX is weighing that entire indice. It's just so dependent on SpaceX at this point in time, right? So that huge drive is because of SpaceX and no other reason. No other reason for that huge drive. So when they do flood the markets with those 911 million shares tomorrow, we could see NDQ pushing down. Okay. Heading over to BTC USDT. Let's take a look over here. Okay, so on my daily market analysis, what I was expecting and what I was waiting for was the price to come down a little bit further into this box before pushing into the upside. We are seeing quite a lot of rejection happening here around the 200 EMA mark. So as I've said, and I've always said, I wouldn't be surprised if BTC reapproaches the $80,000 mark sometime this year. Okay. I don't think we're in such a huge risk-off environment, meaning money's not being poured into the bond markets. It's not being poured into, I guess, the greenback. Indices, absolutely, we're seeing some nice push in there, but we're also seeing individual stocks pushing up quite aggressively. The only reason why people might be afraid of BTC, or not afraid, but not putting so much money into BTC is because they were trying to put a lot of money into more speculative assets, which are going to be AI-driven infrastructure and AI-driven stocks. And we've seen that. If any of you go and take a look at SanDisk or Micron or ASML, it's just, oh my gosh, gone completely out of the window. Okay, but remember, the financial markets are all interconnected. So if money is not being pushed into the dollar back, then or into the or into the crypto industry, and then the stock market should be pushing up. And I think we're seeing quite an aggressive sell-off on the bond markets as well. I can quickly pull that out. I know, guys, it's so boring looking at the bond markets, but you can quite clearly see the bond markets are falling quite substantially. And when the bond markets are falling, the DXY falls, and that means you go long on all of your major currency pairs. So what this tells us is that DXY may continue pushing into the downside within the foreseeable future. I'm hoping there's going to be a nice little pullback at this point in time. I really am. I'm hoping that the DXY kind of comes back up, fails here, and continues down because I'm in shorting positions at the moment on GBP USD and Euro USD. Okay, so what I'm hoping for on the Euro USD, and I just analyzed this at the beginning of this live stream, is I'm hoping this now gets rejected. If this gets rejected, then it should hit my TP. If it doesn't hit my TP and I do get stopped out, then this is going to be my next area, this unverified area of daily supply, of where I'm going to then start looking for another shorting opportunity. Okay, I like to trade the pullbacks, guys. Okay, so I know we're trending upward, I know, but I enjoy trading the pullbacks. And what I would like about this pullback is it should be a very deep pullback. Okay, this one's going to be a very, very deep pullback. And once we then see that pullback, and once we see that market structure movement back into the upside, I'll then take a long position targeting this previous high. Okay, so that's my strategy on pretty much all major currency pairs, actually. So I'm looking for those short-term shorts, and if that fails, then I'm just going to wait for it to then have a reaction to a new area of interest, and then I will short that opportunity or short that position into the downside. Okay, so that's how I'm analyzing the markets at this point in time. We're seeing quite a lot of aggressive movement. It's just been as usual, absolutely crazy under the Trump administration, pushing the markets in crazy directions. Let's go back to the GBP USD just for a minute. I need to clean up this chart a little bit, but you can kind of get a good understanding of what I'm looking at here. Oh, I hate it when TradingView does this. Just remove some of these little bits here. Okay, so yeah, I am currently in that position at the moment. What I haven't drawn out is this high up here. I'll do it a little bit later, but this would be roughly around the area. If I do get stopped out, this would be roughly around the area where I would be looking to for the next pullback. Okay, so that is, if any of you guys are in a long opportunity, this is the region where I'll be looking for those for TPing, which would be what 0.35449, roughly around this area here. Okay, so if you guys are in those long positions on GBP USD, and I do hope you you TP again, I hope I TP, although rather contradictory. Let's have a quick look at AUD and ZD, because I think balance of trade came out earlier today. I'm assuming the balance of trade came out really good for the AUD. I was waiting for it to kind of test around this area before entering into a long position. Let me just replay the market. So that, oh, wait, I don't need to replay. What? No, I don't. Ugh, what have I done? Let me just reload this tab. Sorry guys, my internet kind of breaks down once in a while and I have to refresh my TradingView charts. I was trying to do replay because I wanted to see what the economic data was on the AUD NCD, but unfortunately it stopped me for some reason. All right, here we go. Let's go back to AUD NCD. And let's open this up. Balance of trade. Sorry, so that's coming out tomorrow. Okay, that's coming out tomorrow. And it's forecasted to be pretty good for the Australian dollar. Okay, so we are expecting this to then start to push up. So yeah, we'll be looking for those long opportunities on AUD NZD. Might actually enter into a trade later today if I see it being rather favorable. I mean, prop trading is great and all, but you got to be so refined. You got to be so um, accurate in your entries. So I'll generally just be waiting. I would expect there to be just a little bit of a pullback, and then I would then enter into that long position, perhaps targeting some of these previous highs up here. So I'll be looking at doing something such as this, which would be maybe a 1 to 2.5 risk to reward ratio. Where does that take us to? Yeah, I'd be okay with that. Yeah, I'll be looking at something like that. That'll be kind of where I'll lock it in, but and I'll set an alert because it might take a little bit of time for that pullback to occur. If you guys have any questions on technical analysis, feel free. I have a very strong knowledge and vast understanding of all different types of trading strategies out there. I'm a supply and demand trader. I use liquidity, breaks of structure. I mean, on a chart, I look for key areas of supply, key areas of demand, and areas of potential liquidity. That tells me where pullbacks might occur or reversals. And then my confirmations are just breaks of structure into either side and market structural shifts. But of course, and then trend identification, I use the 200 EMA and the higher time frames, as we all should be doing anyway. I know AUD NZD has just been on a massive uptrend over the last couple of months. Just, I mean, good Lord, right? The New Zealand dollar has really been devaluing quite aggressively. So we are always going to be looking for those long opportunities on the AUD NZD. I would be incredibly shocked if it does reverse back into the downside, and then wow, okay, we're gonna be in some really beautiful shorting opportunities, but I don't see that happening, not for a little while on AUD NZD. So I don't know if you guys are trading minor pairs. My minor pair is AUD NZD. I did trade USD Swiss franc, not a minor pair, but I did trade USD Swiss franc, but I've not analyzed it for quite some time. I'll take some time. If you guys really want me to, I'll go and analyze it a little bit later, and I'll include it in some of my daily market breakdowns for you guys. Heading back to the DXY. All right, so are we seeing that rejection? We want to see it get rejected. We want to see it getting pushed up into the upside. We know the DXY is going to continue going down. We know this because the bond markets are going down. The Fed are selling off all of their US bonds. The Bank of Japan are selling off their US bonds. Okay, so we know there is likely going to be a little bit more of a continuation into the downside in the DXY, but I am hoping that we're going to have a bit of a pullback and it's going to get rejected here. Now, hopefully within that pullback, I can TP on my other major pairs, which are my Euro dollar and my GBP USD. Okay, so these are the positions I'm currently in, and I have gone through these several times. XAUUSD, anyone who is trading gold, I would be very precarious. I would be very cautious on entering into any long opportunities. I know it looks good. I know these look very, very appealing to enter. Oh, what am I doing? Let's just drop down to the hourly. It looks very appealing right now because, wow, right? Wow, look at this beautiful push, but I would be very, very careful on entering into those long opportunities on XAU. Firstly, we're seeing a huge amount of rejection already, and we are at a very key area of resistance. And as you guys know, we like liquidity is often resting above these just above these key areas of resistance. And we also know that gold is supposed to be devaluing even more. I think there was a lot of analyst ratings out saying that gold is likely going to continue dropping. So I'll be very, very careful here, guys, if you are entering into positions on gold. Yeah, you can already see he's getting rejected. I mean, you know, like guys, honestly, the London session is such a manipulative session as well. So you know, they like to push the markets a little bit up, and then you know, when New York jumps in, then we just see that distribution happening. Hi from Nigeria. Hello. Yeah, welcome. Welcome to the live stream. You know, it's fantastic to see traders from all over the world. We have just a huge community of traders from everywhere. You know, always joining us for these live sessions. It's a bit of a shame, I must admit, that I am covering the London sessions, but we eventually, once we do expand the team, and we will have some people covering the live sessions for the New York sessions, and those New York sessions are going to be a lot of fun. I know they're going to be a lot of fun, and it would be really cool because I know some guys who are doing a lot of futures trading, and they find futures trading to just be so um just so much. It's fun. It's fun for them to do futures trading, especially during the New York session. But of course, I'm strictly more just on the Forex trading, more exclusively on Forex. Um, I don't do CFD trading on cryptocurrencies, but I do analyze it. And I saw recently that we have some Ethereum traders, which is really, really cool, guys. I've not done any analysis on Ethereum trading. But you know, if we do get some people in our community who are interested in Ethereum trading or who are doing well trading Ethereum, then I'm be more than happy to invite them on, right? We can do live sessions during the London session with some guys who are doing Ethereum. They can do analysis. Anyway, on the 15-minute time frame at this point in time, guys, like I said, what I'm waiting for is to see a full body candle. Excuse my drawing. My drawing is terrible. I know. A full body candle closure below this line. And then what I want to see is the price come back up a little bit for a retest. And then I want to see it just drop again. And if it breaks that structure, and then I know I'm just going to enter into a big boy shorting opportunity. And I'll probably do something such as this. Gosh, why did my chart come up looking crazy? I'll probably do something like this. Yeah, actually, that is wild. I mean, a 1 to 5 risk to reward ratio, but that is exactly, you know, the trade that I would probably take. Obviously, I don't really trade so much on the lower time frames as much. I know they're very exciting, but I try to stay away from scalping. I'm not much of a scalper, and there's some fantastic strategies out there. If you guys are scalpers, there are some fantastic strategies out there. I think the top ones that I've heard is orb strategy and IFVG trading, which is inverse fair value gaps. Oh, what happened? I just my live stream dropped out just for a second. Sorry there, guys. Sometimes the internet kind of goes a little bit haywire. We got some new companies within our office buildings, and I think they're using all of our bandwidth secretly. So sorry about that, guys. Sometimes the internet goes down once in a while. Which section is more profitable? Well, I mean, across all different financial instruments, they're more profitable. It's not, you can profit on every different type of financial asset class. It's just about um, bringing in, analyzing the charts so that the probability that you profit, that's what you look at. And I think Forex is the best one to look at. For me, like I think if you know when you do an analysis on Forex, it's such a mature market. It is the biggest market in the world. It's not going to move. Um, it's not as unpredictable, I guess, as let's say the crypto industry, which is prone to just like news traders and um, you know, rug pulls, these types of things, right? So Forex, I think, is the best one for me to analyze, or the one that I find to be the most profitable because I can analyze it better than I can, let's say, penny stocks or individual company stocks or cryptocurrencies. Okay, so yeah, gold as well. Actually, gold's pretty good. Gold's a pretty good one. But you just want to kind of trade. For me at least, you just want to trade financial instruments that have the most reliable information. And I don't think there's any more reliable information than macroeconomic data. right? So that's interest rates, monetary policy, inflation data, non-farm payroll, employment data, that kind of thing. If you do want to trade macroeconomic events, I don't think prop trading really allows that, but they're really good signals, right? They're really fantastic signals to see where price is going to go. Okay, I know I've just been I've just been on gold, but that is my technical analysis on gold. That's how I would trade personally on gold. Let's see how it's going with my GBP USD. This is why I don't play around with the lower time frames, because I just can't see what's going on properly. Cool. We're starting to see that rejection on GBP USD. Like I said, I'm hoping that it does reject and then just continue into the downside, and then I eventually TP. That'd be great. But it's fine if I do get stopped out. If it does continue into the upside, then we're going to be looking around this area up here. Let me zoom out so you guys can see it a little bit more clearer. If I do get stopped out, then we're going to be looking around this area here, which is another key area of resistance for another potential pullback that we can trade. As I keep saying, big part of my strategy is I like to trade pullbacks. They're just easier to predict for me, at least. But I know there's a lot of you guys out there who are supply and demand traders, swing traders, and you're just looking for those key levels of either reversals or continuations. Absolutely wonderful. As I said, if you guys want to tell me your trading strategies, I can give you a little bit of advice on the trading strategy, or at least what I know about the trading strategies. But I'm not a specialist in every trading strategy, but I certainly know quite a lot of them out there. I think it's really good, and a big part of the AIFO, a big part of AIFO, especially the academy, is to just try and educate traders on all different types of trading strategies out there, because I think even though, yes, you can take a look at, I don't know, let's say 10 different trading strategies, and if you try to apply each and every one of them all at once, it's not going to work. But if you find a trading strategy, you refine it to yourself, and over time you just hopefully will become more profitable and become a profitable trader. But when you're applying that trading strategy, it doesn't hurt to understand other trading strategies. Like, for example, I'm a supply and demand trader, and I look for very key areas of supply and demand. And within that, I am also looking for potential areas of liquidity. So where liquidity is being built up within the markets, these are very, very helpful. And then as confirmation, I use breaker structure and change of character, right? On the lower time frame. I don't know if you guys know what breaker structure and change of character is, but if you are new to trading, then just as an example, that's a breaker structure, right? Because it was pushing up, and then it pushed up past this previous high, that broke market structure, right? And so if, let's say, for example, because we're trending up, we're above the 200 EMA. I'll just draw that, right? We're above this big red line here, and so we're trending up, and this is one area that could break structure. But the previous low, so the second low, that's how I look at it, if that gets broken, then that's a change of character, and that tells us that the price is maybe now reversing into the downside. So we'll change our strategy to shorting opportunities, right? Actually working with a fantastic trader. He's been trading for, I think it's about 20 different years. Different years. Been trading for about 20 years, and he exclusively trades harmonic Elliott wave, which even myself struggle to understand, but it's a fantastic systematic approach to the markets, and we're going to be working with him and bringing out some of his videos. So if you guys are interested in harmonic Elliott wave, it's a very, very systematic and technical strategy, but it has a very, very high success rate. So if you guys are into that, then fantastic. When we release that content, just put your comments out on those videos to ask for more, and we'll continue working with him. By the way, this is tea. I think I had some people on the live stream previously who were like, are you drinking whiskey? I was like, no, it's just tea. Though whiskey would be nice, must admit. Okay, yeah, so we're about, what, 37 minutes into the London session opening. I can drop down to the lower time frames just to make this a little bit more exciting for any of you guys who are trading on those lower time frames. As we can see here, we can see a very nice breaker structure. We can see a bit of resistance happening here. But like I said, I'm in that shorting position, or at least you guys can see I'm in that shorting position. So I'm hoping that it's going to break below this low, and then we'll just see that beautiful continuation into the downside. That is what I'm hoping for. There's been quite a strong amount of rejection here. But as we know, London session is a bit of a manipulative session, so we could see price taking me out, maybe even taking whatever could be resting here. So this will be a very key area here, key area of resistance, and perhaps the pullback would occur from my stop, from where my stop is. And it's happened to me loads of times. But it's okay, right? You know, you need to control your emotions when trading. So being stopped out is not the end all. It's in fact a great opportunity to learn from. Okay, so just gotta be very cautious in how you do your risk management. How do you join our community? Should be several links. Should have several links out there. Let me see if I can find you a link, and I'll drop it into the chat for you guys. Let's take a look at GBP USD, and this is going to be a very highly affected pair. It's not looking good for me. We are trending beautifully up, and you know, beautifully into the upside. So might not be fantastic for me. Might see a bit of a stop out. Probably won't occur on this live stream. Probably be a little bit later. But you know, take a screenshot. You can check and see if I was right or wrong. It's okay. I'm very open about any of the trades that I get wrong. It can be very frustrating, but you know, no one is an expert overnight. It does take multiple years to become a very good trader. And I think a lot of you guys are aware of that. I don't know why I can't actually load our own community. That's interesting. I think it's just my internet. Like I said, the internet's been very brutal recently in our office, so it does slow things down. It's supposed to be loading. It's not loading. AIFO. AOL. Oh, how strange. Yeah, no, I'm really I'm not too sure why the community chat's not actually loading for myself at the moment. I'll take a look into it, but you know, later on you can easily go over to our site, and at the bottom there you should be able to find our Discord channel. There should be several links to leading you to our community. So look at BTC. We are supposed to be looking for those long opportunities, but I think it's just moving slowly because of all of this movement that is happening across the stock market. So what I previously analyzed was a much sharper pullback. Obviously, it's been a shallower pullback, and now we're pushing up a little bit more. What I would anticipate then is a pretty deep pullback, maybe around to the 0.5 fib, which we kind of already we're already beginning to see. Yeah, so what I'll probably do is I'd wait for roughly maybe around here before then entering into that long, perhaps. I don't personally trade BTC, but I do analyze it, obviously, for you guys. I am looking for those long opportunities on BTC USDT, mainly for the fact that we have been dropping, or at least BTC has been falling off a cliff for quite some time over the last couple of weeks. So we have been trending down aggressively, and then we finally found a bit of a support area within this weekly demand zone, and we begun to see the early signs of reversal. It returned back to this demand zone, and again we're seeing that support, and hopefully it will now continue back toward the $80,000 mark, which is roughly around here. Like I said, guys, I would not be surprised if BTC retraced back into the $80,000 mark by sometime this year. Okay. So that, that's why we're looking for those long opportunities at the moment, and hopefully we will see that reverse. And I think the markets are slowly moving more toward those risk-on markets. But we also need to be a little bit careful of the AI stock boom. AI stocks or any companies that are supporting AI at this point in time is going to weigh heavily on the financial markets when, let's just say, the bill is due, right? Like when people start looking into these companies and seeing, oh, okay, well, where's this revenue that we were promised? And then we're going to see a major correction across the stock market when that day is due. Okay, I mean we can. It's very evident within, let's say, the Nasdaq 100. We have just been trending up. Look at that. Just look at it. Just over the last couple of years, and then look at this huge push, major push. This huge AI, largely driven by AI companies, just pushing the Nasdaq 100 into the upside. And if we take a look at companies like Micron, we take a look at companies like ASML, SanDisk, Nvidia, all of these stocks, in my opinion, well, all of these stocks are priced at future prices. They're priced, they're valued at what the revenue could be in the future. So in the future, when we arrive into the future and they see that revenue is not there, we're going to see a major correction, major correction. I would not be surprised if these indices drop by about 40 to 60%. And it's not unheard of. Yeah, that could be quite a substantial move. Anyway, that's just my general opinion on stocks if you were a long-term investor. Heading back to USD JPY, because I do want to reiterate the fact that we have pushed aggressively into downside on USD JPY, and a big reason for this is because the Bank of Japan liquidated a substantial amount of US bonds. They sold a lot of their US bonds onto the market, and that's what that is here. And then the Fed, surprisingly, also flooded their bonds onto the market as well. And a lot of people would say, whoa, that's crazy. But guys, it's a Trump administration and Trump wants a weaker dollar, right? So, if we have an administration who wants their currency to drop, then we're likely going to see the DXY continue to drop. But yeah, that's why I'm not trading this at the moment. Just look, like I'm on the 4-hour time frame, right? These are the big moves on the 4-hour. Look at all these little moves on the 4-hour frame. Like nothing really moved on except for this one on the 4-hour frame. So I'm too precarious. I don't want to be playing around with the USD JPY so much. So I don't want to analyze it. Let's head back to the Euro USD, because this is the most liquid Forex pair out there. We are beginning to see the initial signs of that rejection on the 4-hour frame, this beautiful rejection candle. And hopefully if it closes in a rejected state, then I think I will TP today. Not today, maybe on Friday. I need to get out of my positions anyway before the weekend. Can't really hold these positions over the weekend because, I mean, when Sunday midnight comes around, and there's been a major move in the markets, that flash sale is going to hurt you guys. So I always try to keep myself liquidated on a Friday. What else is coming out? What's coming out on? It should be non-farm, right? Oh, this TradingView always do this to me. There we go. I think non-farms came. Oh, ISM PMI. Oh yeah, sorry, it's coming out on Friday. Unemployment rate for the US dollar US is coming out. Pound is forecasted to remain the same. Non-farm payrolls are forecasted to be higher than expected. And what that usually does for the US dollar, it's going to push the US dollar up. And so that might play very nicely into this technical analysis right here. So we could see the Euro USD falling on Friday. Balance of trade is also expected to come out pretty bad for Europe. Not bad, but forecast to be lower than expected. And that expectation, again, is going to push the euro dollar into the downside. So if you're looking for shorting opportunities based on macroeconomic data, then you're looking for shorting opportunities. Let's look at the uncertain GBP these days. As I myself am British, so a lot of political uncertainty happening within the UK. It's just going to create a substantial amount of movement, and we've seen that movement happening over the last couple of days, even though it's just been pushing so aggressively into the downside. Theoretically, we should actually be looking for those shorting positions. Pricing coming up, taking whatever liquidity was resting here. We should have seen that push back into the downside, but that's not what we're seeing at the moment. Largely based probably because the bond markets are pushing down, you know. Bond prices are coming down. People are selling their bonds. ZT, T-note futures on the 2-year bond market. Look at that, people are just selling off their bonds. Yeah. Yeah, they're just not as attractive, I guess, to buy, to purchase. What I did want to show you guys is, okay, so bond yields are what, 4.2%. If we look at interest rate over the inflation rate. I'm quite surprised by this. So I don't know if you guys watched the Academy videos on Forex fundamentals, but if inflation is high, what central banks usually do is increase interest rates. And if interest rates increase, then the value of that currency will increase. It will go up. But right now, and a lot of people are telling me that we're in a really highly inflated market, but I don't think so. 3.5% inflation rate is not that bad in my opinion. I think 2% is the range where you want to get to. So down here. Hey guys, so the internet for some reason keeps cutting off again. I thought I solved this from last week. Really sorry by that, guys. It can be very, very frustrating. Totally understand if I get cut off for quite long periods of time. But we are coming a little bit closer now to the toward the end of the live session. I only really do the first opening hour of the London session, and to be honest, although you can see not me actually trading, but just doing a preliminary technical analysis on the markets, you're also very welcome to ask me questions about AIFO, and if you guys have any questions about the financial markets or your own trading strategies, and of course I'm certainly happy to answer those. So yeah, please. I mean, I think trading is so much cooler when you're doing it with other people, especially if you're doing it with the community of people. Um, so always come and join these live sessions to just have a discussion, have a chat. Um, yeah. Let's see about. Oh, I finally finally opened our Discord. I can drop that into the group chat. Just give me a second. At AIFO funding. Right, hopefully GBP USD is going to get rejected and Euro dollar gets rejected. That'll be really cool. Obviously I wouldn't follow what I'm doing here because what you'd probably want to wait for if you were going to enter into a position, you'd certainly want to wait for this previous low to get broken with a full body candle. Then that should signal to you that it's going to continue moving downward. Okay, probably down to these lows down here. Okay, so if you are looking at trying to find some confirmation that it's going to continue into the downside, that would be the confirmation I would have followed if I wasn't already in this trade. Okay. XAU, we should see this pushing down a little bit, and we certainly are. It's again getting a little bit, yeah, see, so nice full body. Well, I wanted the full body candle to break down here, but now it's kind of coming up again for that retest. And so if it then comes down and it breaks this previous low, then I'll probably enter into that position. That's how I'd analyze it. Of course, you guys have your own trading strategies and different, setups and styles, but that's generally how I would look at it. Break and retest, basically, especially on those lower time frames. I just love at how gold moves so fast. I do like watching the chart. I just love seeing this. Beautiful Marabouzo candle coming out. This is probably giving a lot of you guys that FOMO feeling, right? Try and resist it. Try and resist it. You just got to be patient. Let your trading strategy play out. If you're doing a good enough analysis and you analyze that actually it should be going into the downside, I just need to wait. I just need to wait and see. And if that confirmation hits, enter. And then, wow, your probability of a winning trade increases dramatically. Okay. If you just trade FOMO, if you just trade these individual little candles that are looking good, you're probably not going to be a long-term profitable trader, I have to say. When I was younger, I did that. I was just trading candles on how I saw it. I lost quite a bit by doing that. It wasn't long term. I think my winning streak was something like 2 or 3 months. No, not 3, about 2 months. Yeah, just like trading candles. And it just all went downhill. Okay, so I know firsthand that you're not going to become a long-term profitable trader just by trading candles with very little strategy and patience. Oh, that is a beautiful candle, though. Here we go. Another 54 seconds, and then we'll see the next candle. I'll zoom in. I think on my PC I can see quite clearly, so it's quite nice. Oh gosh, that tempting. Look at that tempting candle. Refrain. Genuinely think it's going to move back into the downside. I know a lot of traders trading 1-minute candles. I mean, I salute you because there was a substantial amount of movement on the 1-minute frames, but I avoid 1-minute frames. In fact, I'm on a 5-minute frame right now, and I don't touch 5-minute frames at all. Barely touch 15-minute frames. I do most of my entries on the hour frames. Just because price is moving at such a low interval. I mean, 4170.12, and I think it goes down to another decimal. So if we're looking at long-term overlook, and we see that it's going down, then we know we're just going to be looking for shorting opportunities on those lower frames. All right, well, getting a little bit of buying pressure in here at the moment, which is again I'm looking for those shorting opportunities. I think it's going to reject here. Even if it does push up even more just above here, I still think it's going to get rejected. Honestly, I'm looking for those shorting positions, and I don't want to be touching, gold if we're at a very key level of resistance. Okay, so I'd be looking at shorting this market, not going long. That's my personal judgment. Anyway, guys, I know I got the internet cut out there for a little bit. Very happy that you guys stuck around this long, and thank you for sticking around while the internet was cut off for those last couple of minutes. But if you have any questions, feel free to just you're welcome to ask me. Drop them in this chat here. You can comment on some of our videos across YouTube or join our community. Any of you guys who have brought a challenge, well done. Hopefully you are passing those challenges, and hopefully you're becoming a funded trader. I know firsthand how nice that feels, once you get your funded account. So hopefully you guys get a funded account with AIFO. If not, and you're still searching, go and do a free trial. Go and do a free trial and just play with the markets. For a very long period of time, I didn't actually enter any positions. I was just putting, these in, and I just analyzed if it worked or not. Also did a substantial amount of back testing as well for my trading strategy, and I think I've got I'm about 58 to 60% win rate trader on a 1 to 2.5 risk to reward ratio. So long-term profitable, which is cool, but yeah, you got to be patient. It takes time. I want to get my win rate up to about 80% eventually. But again, it takes time. So, as I said, guys, I'm only doing these open sessions for the first hour of the London session. And so we're almost at that closing. I do want to start doing New York sessions, but I want to do the New York sessions. I want to bring people on. I want to bring some of our traders who are actually actively trading the New York sessions on, and so you guys can ask them questions as well. And if you guys, just want to share your trading strategies, you want to share some, you want to ask some questions, more than welcome to do so. All right. Anyway, that's all I have time for today. I'm really sorry. I do want to stay on and, continue chatting with you guys and just analyzing the charts and just looking at them. I know it's a lot of fun to do, but unfortunately I'm unable to. So, as in, I mean, I can, but I'm only doing an hour, just in the London Open. So, anyway, guys, thank you so much for joining. And I usually do daily market breakdowns on Mondays, Thursdays, and sometimes Fridays. So just keep an eye out, and that's when I just release a technical analysis of the charts. See, gold is now getting rejected, right? It's starting to push down a little bit more here. Anyway, guys, that's all I have time for today. Thank you so much for joining, and I look forward to seeing you guys in the next live streaming session next Wednesday. So please join me for that. Come with me for come to that session with some questions, and come to that session with your trading strategies, and let's give them a go. Let's take a look at them on the charts. All right, guys, see you next week.